This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen, the most advanced cycle analysis, hot off the press.
Yeah, Bitcoin. Let's talk about Bitcoin today. It's another time to talk about Bitcoin. But first, welcome to another episode of Cycles TV. We are the foundation for the study of cycles. My name is Lars von Thienen, and we are doing here cycle analysis every week, time-based cycles. Hello, Andrea. Hello, Jupiter. Hello, Smiles are good. Tyler, I see you. We are live, so drop in your questions in the chat section. Latest at the end, I will find the time to go over your topics. Yeah, you asked for a review on crypto Bitcoin for sure. And as you know, I'm reviewing Bitcoin for a long time. I have some kind of master chart on Bitcoin, and there is another cycle due right on time. So in the end, nothing really changed from my analysis, but for sure we need to update the short-term cycles on Bitcoin. And that's what I want to do with you within the next 20 minutes, 30 minutes. Let's jump to some Bitcoin cycle analysis. All right, let's not wait. This is the Bitcoin price as we see it today. We have this sharp drop here during the last months. We are close back to 80K now in Bitcoin, and we all are interested now. So what are the cycles? So And you are aware, what we are doing here is pure time-based cycle analysis. I will not reveal or go back into any macroeconomic situation around Bitcoin, about the crypto market itself, about politics or geopolitical topics around the crypto market. This is pure digital signal processing on the price of Bitcoin. Nothing more. Nothing less. You derive your conclusions, that's for sure. Yeah, so let's focus on time-based cycles. Okay, at the bottom we see the spectrum related to this chart now, and let me first highlight this cycle here with the length of 195 trading days, which is around 200 days. And if you're following my analysis on Bitcoin here in the past years, you're aware of the nominal 200-day cycle is a very important and prominent cycle, which was visible at almost any important move in Bitcoin going back the past 10, 15 years, as we have price information here. And we see it's also standing out. It's not the most perfect cycle, so the right shoulder is not really going down, but we see this is a 200-day cycle clearly. And it's also labeled, you see the circle around the triangle. This is identified as a dominant cycle. So therefore, let me start with this one. There are other ones here to the left, and there's also a prominent long-term cycle, but maybe let me explain you why we could exclude this cycle here first. And the main reason is that we have a very flat plateau in the spectrum. And by flat plateau, it means the right shoulder is not really sharp going down to the zero line here to the right and to the left, which would be an important cycle. So a flat plateau in a spectrum means you are not really sure what the length of that cycle is. From a mathematical point of view, there's a peak at 347 days. But to be honest, it could also be 360 or 320. Yeah, it's just that mathematical peak is not really giving us any confidence that that length is correct, and that therefore also the phase cannot be trusted. So therefore, this is too flat. Yeah, it does not hurt if you want to sit on that spectrum. And then the next one, so the next highest one here from the amplitude perspective, is exactly the 200-day cycle. And from historical analysis, from the perspective of the persistence of this cycle, we know this cycle is important. So therefore, we must start, and I want to start our analysis with the 200-day cycle. So let's activate that cycle. We see it activated here on the chart. And if we zoom in into that cycle, we see, we clearly see that this 200-day cycle has an expected top here in November, December, with a downswing now ending in March. And this is, and that's what I said, this is nothing really new. I showed this in a lot of videos here, that we must follow the repetitions of this nominal 200-day cycle until this repetition has been finished here. So this is the count of 3 and the count of 5. So this is why this is the count of 4 and this is now the count of 5, where we need to wait until we arrive at this final conclusion of the repetition of that cycle, which is due in June now. And we have a slight right translation. So therefore, I will also switch to the what I call my so-called master chart here, which is, I think this chart is already a year or even longer old. And you see here, this is the blue one here. Let's start with the blue one here at the bottom. This is the theoretical 200 or 188-day cycle, which was the most dominant vibration of the 200-day cycle, which had a top due here in October 2024, with the projected down into end of January this year. So we anyhow expected a down move into end of January 2025, and then another up leg starting into April, this year. So this is the expected static cycle, which I have posted and updated very often. So for sure, that's not dynamic. So what needs to be seen, this also into context of the seasonal cycle. So the seasonal cycle lasts now into May, maybe this neutral period here into June, early June, before the next bearish phase will kick in from a seasonal perspective. So we are still in a very positive seasonal period, where now this final upswing of this 188 days or the nominal 200-day cycle is due end of January into April. So this was the expected cycle analysis. And I think also on this channel here, I repeated it very often. As a cycle analyst, I mean, there are no static cycles out there. You are, I'm sure, aware of that. So we need to follow the dynamic component. And one topic of the dynamic component is that the 188-day cycle now shifted into a 195-day cycle. So that it's never static. It is never exactly 188 days, 210 days. So the nominal cycle of 200 days has a variation between 180 to 220. So the cycle kind of vibrates or morphs in that range. And therefore, this dynamic cycle analysis we're doing here is important, because if you update your cycle analysis at each day or latest at each weekend, if you deal with daily data, you will see that this cycle might shift in length and also phase. So what we see here today is now the nominal 200-day cycle, which is still the most dominant, has at today's point in time a length of 195, which was 6 months ago 188, but it's now 195, and therefore slightly the turning points also in the projection shift slightly. So we should not be too surprised here. So the top is still the December period, and instead of the bottom expected here end of January, the bottom of the 195 is now expected, exactly at this point in time here. So we are running into the variation of the 200 days cycle, which is now currently at a bottoming point in time. So that's the most important point. And as we are still in a positive seasonality, the time window now from mid-March into April was anyhow projected long time ago, now shifted to the right. We have a right translation, which means into May, maybe June, the next upswing cycle is to be expected on Bitcoin, which will then finally conclude the 5th repetition of the nominal 200-day cycle, which is an important closure. And then we could expect the upswing cycle maybe coming to an end in Bitcoin. But this is still left. Positive seasonality, now bottoming of the nominal 200-day cycle right now. And finally, let's add the technicals. So the technical condition, as seen here on the chart or at the bottom, where we use the dominant cycle length of 195. So this is the length of the dominant cycle. And we use this length here to set up the cyclic tuned RSI indicator, which is at this point here, not firing, but close to generating also a possible buy trigger here. So you see the technical information, where from the price chart, we had a perfect sell condition exactly at the time cycle top. And until then, we just dropped now into this situation where this technical indicator, so this has nothing to do with time cycle, it's now from a technical condition close to getting a buy signal. So this would be in perfect in alignment if in the next 2 weeks we could see a possible upswing. This is just looking at one cycle, right? And you're aware of just looking at one cycle is never the full picture, but it's the most important cycle to look at. So this cycle is the cycle which I'm monitoring, watching, and repeating here on the channel quite a long time. If you are using our analysis set here, you will be able to follow the dynamics of that cycle on your own and could have followed the shift from 188 to 195 and now to expect a bottoming here. So now let's also have a look at the other cycles which are shown in the spectrum here. There's not only the 195, and the spectrum is a little bit more complicated here. So the other peaks we could see here is 163, 141, and let me zoom in here, 124. So those 3 peaks would qualify if we don't have any clue about the historical situation on persistence of a cycle. Also 3 candidates we could pick. So let's now also have a kind of view on those 3. Let me first disable this one here. So 163, 141, 124. So I will zoom in here a little bit. So we find those 3 candidates. Those 3 candidates here at the bottom. 163, 141, 124. So those 3 cycles which you see here are also identified as dominant ones, so ranked 1, 2, and number 5. But more important before I go to the chart is that they almost all indicate a positive cyclic phase which is upcoming. So independent of the length of those cycle, the 124 is already in a positive upward phase. 141, you see the green dot here. So this means this cycle will shortly reverse into the positive phase. Same for 163, which will also shortly reverse to the positive side, which is currently bottoming already upward phase. So this is what I see directly by only looking at the numbers of that spectrum. And if we now want to validate that on the chart, let's activate 141. Yeah, as I said, has already bottomed, is now in its upswing cycle. 163 is also bottoming now, starting the upswing cycle. And 124 is already in the upswing phase. So even though, so the shortest one will go into April, 141 goes into May, 163 also into May. So it's not really important to understand which is maybe more dominant than the other one, because all three paint the same picture. So we could also aggregate those three with a nominal 200-day cycle. So let's do this. Let's build a composite out of all those 4 possible cycles. And you will see it looks like there's one important cycle now. This is not one cycle. This is the composite out of 4 cycles, which seems to look like one cycle. But that's what I'm trying to say. All those 4 cycles, yeah, from that spectrum here, 1, 2, 3, 4, tell the same story. So that we have now the cycles within cycles alignment of those 4 cycles, indicating a possible upswing phase into at least May, if not June this year. So that's the composite of those cycles. So this is the story analyzing long-term cycles. So everything above 100 days here to the right, all long-term cycles, yeah, those 4 tell the same story from this moment in time into May. That's not always the case, so that's quite interesting to see this now line up in Bitcoin in combination with the technical situation we have here. So technical situation could confirm that timing window using long-term cycles. Let me now add another perspective to complete the picture here, or even give you a broader picture on Bitcoin. If we have a closer view into the short-term cycles, which are also there, maybe not really discussed. So you see here in the lower left, yeah, so there are a lot of short-term cycles I've not spoken about. So we can also zoom in here a little bit. Oh, no, that was too much. Let me reset that one. Zoom in to this section here. This section. So here we have now only the spectrum going up to 100 days. And what we see here, there are 2, I call them short-term cycles because they have a very short length, so below 100 days. And we could talk about a 65 days cycle, which stands out here in the spectrum. And then a second cycle, which with about 84 days. So we could also take those 2 into account, which could also be harmonic relation to the 140, 160, 200. So if you multiply this cycle length by 2, so 84 multiplied by 2, you will get 160. Yeah, and if you maybe remember, 160 was exactly that cycle we already discussed. So the nominal 8-day cycle could be just an harmonic relation of that cycle, similar to the 65-day cycle. Multiply that by 2, and you would land at around 130. So 124, 141. So this could also be a harmonic relation to one of those 2 cycles. So, I mean, we are not sure, but we see a harmonic relation to the longer term cycles we have analyzed. But let's now only have a look at those 2 short term cycles on its own. Yeah? So let's refresh. Let's exclude all selected cycles. Let's remove the technicals. And let's start with the 65-day cycle. that one, which I would count a very short-term cycle. You see, you have a lot of repetitions here, and it's very hard to see just from that cycle if it has or if there's the real cyclic component, as we have huge swings which make it impossible to spot on the price chart. So therefore we need to apply some filtering to the price chart so that we only see the component related to these 65-day cycles. So we only want to see the price swings which are related to that length, and we then remove all other possible cycles from the price signal, which is what the cycle highlighter is doing. So we can have a view on that if we right-click the 3 dots, activate the info box. Let me make this a little bit larger here. So what this now activates is the cycle highlighter window here at the bottom, only showing now the price swings, which is the light blue here, which are in the price series overlaid with the theoretical 65-day cycle, which is the red component here. And what you are looking for is about the correlation between the light blue one and the red one in times to when those peaks happen. So and you see this here, so we have a very nice alignment of the theoretical peak with the real peak of that length in the price series. So there is almost no or just a very short deviation in time. So that cycle has a very low time variation. You see that from the amplitude perspective, you can also see the amplitude variation. So the red cycle shows you the average amplitude of that cycle, which is a perfect fit here in the past. And in the recent swings, to the downside and to the upside, we have huge amplitude acceleration. So the amplitude of that cycle, so the influence of that cycle length has even been increased, while the time component, so the timing component, is still very stable, which from that perspective gives you an interesting edge that you understand now that this 65-day cycle seems to be becoming more important in current price action. Then you could also have a spot at all the repetitions going into the past. You see, even if you move back further, that this cycle has a long history. Even now going back into 2022, where those theoretical red and light blue correlations in regards to time has a high correlation, which means this cycle has a low variation in the timing component and in the amplitude component, which means that the 65-day cycle is a very short-term cycle which has a cyclic signature in the price series. And now, last but not least, what does this cycle tell us? I tried to explain you that it is an important cycle, and it has become even more important as the amplitude component of this cycle has become more important in past repetitions. So if this cycle has become more important, this cycle is also now in this upswing phase into April, stacking up to the other 4 ones I've now also shown you. And let's now do the same test for the 84 days cycle. So the 84-day cycle, let's update this here. This is maybe due to 2 weeks. It's 2 weeks from now, 24th. So therefore the low might be around the corner. Let's also activate the info window for that cycle here. So 84, you can also observe if there is a shift. No, the 84-day cycle has also a long history in referencing short-term price behavior. This is now due to maybe 2 weeks to go, so we are close to a bottom and then indicating also an upswing into May. So that's the next cycle to talk on. So long story short, final conclusion. If we activate now, let me reset the spectrum here, the nominal 200-day cycle. Nominal 200-day cycle, most important from the analysis. Seems to bottoming up. Let's now add the 124, 141, 163, which could be possible cycles. We're not quite sure, but from a pure cyclic analysis, we could add them. But just telling the same story, they all synchronize their lows right at this point in time. Now even adding the short-term story, which we have 2 cycles, which I told you 65 and what was 84, which also close to bottoming. Now you see the sharp synchronization of all those cycles which align their bottoming phase just now. And a window which was expected. So no real surprise that we are dropping into the February period. Let's say it that way. This was anticipated anyhow already last year, a drop into February. So I know for short-term timing it won't help you. But at least now we see the current actual cycles with their current phase and state right now indicate that all those cycles are syncing up their bottoming phase due to, and that's the final leg of the 5th repetition of the nominal 200-day cycle anyhow, which I'm waiting for, which is still in a positive seasonality which lasts into June. Now you have my updated Bitcoin analysis. I also showed you the technical condition. I mean, you know about this. This is just education. This is just time-based cycles. So there are a lot of other variables around crypto and Bitcoin which will influence any price movements besides cycles. So you derive your conclusions, what you will do with this pure cycle-based analysis. But it also explains how we view cycles, how we use cycles, how we select cycles. That's the purpose of that session. Yeah, maybe now, therefore, let's now jump to your questions, and I'm happy to take whatever you feel we should discuss related to that analysis. I will scroll back. Yeah, Edward, so the all cycles look green. I mean, in the end, you have spotted this right at the start of the session. This is what I also tried to explain with putting up this composite out of 5 cycles. They all tell the same story. You spotted it right at the start of the show. Yeah, I'm just browsing your questions. Yeah. Maybe Tyler, your topic, I was told Bitcoin lags the stock market by about 2 to 3 weeks. I cannot comment on that lag. The comment I want to make is that in recent weeks, I often hear that there is a very high correlation between Bitcoin and the Nasdaq, so the tech stocks. So if tech goes up, Bitcoin goes up. If tech goes down, Bitcoin goes down, and there's a high correlation out there, which is true. So the correlation between the tech stocks and Bitcoin right now, or the past weeks, is true. But I always state a correlation is just the view into the past. No one tells you that this correlation will stay intact forever. So assuming you see this tech stocks tanking, maybe, not sure, this does not mean that this is always the correlation which stays in place for Bitcoin now. So the relation between Bitcoin and the stock market, which you are referring here, regardless if you count it a lag or a correlation between two asset classes, I think is always a view into the mirror, into the past, which gives you no clue about if this correlation will stay true into the future. So, and I would be careful, as this could be decoupled quite quickly, because Bitcoin could also be seen as a different asset class than just the earnings of tech stocks. So, but I think that's the purpose of a lot of other videos out there. So therefore, that's not the place to discuss it. I just often receive similar questions. I know the cyclic RSI defaults to the shortest cycle. What is the correct cycle length to apply to chart? Yeah, WS. The basic procedure is use the dominant cycle you have detected. So, and in our case, the most important dominant cycle was the length of 195 days. So the nominal 200-day cycles, or in specific right now, it's 195 days. So that's the correct length. Use the length of the most dominant cycle, most prominent dominant cycle, which in our analysis was 195, which is not the shortest. It's not by design the shortest. It's the most dominant one. And then use half of that length. So use half of the dominant cycle, which would bring you to around 95. But you can't go wrong with also using 100, as this is half of the nominal 200-day cycle. So that's the cyclic RSI I would set now here for the for Bitcoin, and that's also the technical. Sorry for that. The technical indicator, which I showed you here. So just repeating, so the cyclic RSI length was defined by the length of 195, so using half of that cycle, which brings us to that kind of indicator calculation here, right? So hope that helps, WS. Yeah, Andrea, also very important topic to discuss about the sample you use for analyzing that cycle, or the spectrum of that cycle. So in that case, I'm using more data because, as we know that there is a 200-day cycle in that cyclic in that component of Bitcoin, I always extend the data that I'm able to see the 200-day cycle showing up in the spectrum, as we know it is there. It might fade out, that's true, and if you use a shorter sample period, you won't be able to spot this. But as I want to see still to have that in the spectrum, I have extended it also from 850 now. But you should always use important tops and bottoms to select those periods. So the best case would be use previous major high or previous major low to that, which is then around that sense. And the 323-day cycle would be interesting to see if it is really sharp in the spectrum or if it also has a flat plateau. But Andrea, that's exactly also a secondary analysis you should do with a different sample case using the spectrum. And Attila, half. So should the CRSI indicator be set to the length of the dominant cycle or half to its length? Half to its length. So you derive the dominant cycle first. Setting the CRSI is using half of the length of the dominant cycle. Yeah. WS, I mean, it was not shown today, but at least your question is interesting. Can you further explain why intraday cycles less than 20-30 minutes is just noise and that we should ignore? Yeah, this is the general observation that the shorter the time frame is, so intraday cycles, you squeeze it then into 4-hour, 2-hour, 1-hour charts, and therefore you try to spot cycles that time frame, the swings in those shorter time frames are more influenced, for example, news-driven. So you see a lot of swings which are just based on, I don't know, the Trump administration issues some additional news on how they will deal with the Bitcoin reserve or whatever. This will influence the Bitcoin price on the short-term scale very enormously. And these kind of news-driven events is, from an engineering perspective, only noise. Yeah. So, and this noise will make it hard to identify real dominant cycles. And if there is too much noise, so too many ups and downs in price influenced due to news or single events, which I call noise. Yeah, so all the media hype out there, all the CNBC news you might watch as intraday trader, I would call it noise. Maybe in an intraday environment you want to trade noise and you want to make trades as you are the first one seeing some kind of news and getting some advantage out of that. But from a cyclic perspective, this would be just trading noise. As a cycle analyst, I would try to get away from noise, see the real cyclic component, and then beyond that. And as said, if you go shorter and shorter on your time frame and below 20 minutes, I think the price swings are mainly influenced by noise. I mean, there are short-term cycles for sure. I'm not saying there are no cycles, but it gets harder and harder to spot those cycles, WS. That's why I think even shorter time periods, from a mathematical perspective, you can ramp up those charts. You will see a spectrum on 4-minute, 5-minute charts, but successfully trading those cycles is hard because maybe these are not real cycles. It will show you there is a cycle from the spectrum, but it's not because the data was just too noisy to spot the dominant cycle. So hope make it clear. So therefore always start with data sets which have a low noise ratio. Yeah. Yeah, some interesting comments here, but I cannot really argue on those. And maybe ending with that, Pobos, yeah, that's the current outlook. So the fifth wave should not be later, so should be expected. It was expected in April from the analysis past year, but as we now have the right translation, it goes into June, which is also the end of the bullish seasonality. Not later. That's what current cycle analysis shows. And Attila, yeah, that's what you say is also the 60. Thanks for mentioning that. So there is some harmonic relation in those cycles we just analyzed. I was thinking of, I'm not quite sure, but 65 is not only harmonic relation of 2 to the 124 cycle, it's also the third harmonic of the 195 cycle. So it could even be interesting. Okay. Yeah, I mean, it's a complicated question. The 200-day cycle, is it possible to have an inversion? I really don't like the idea of inversions because in most cases, it's just an execution that your cycle analysis was wrong. So, let's talk about it this way. I think inversions are a topic of interest which needs quite a lot of more research to argue and to discuss if a cycle inverts. There's no real scientific analysis available. If there are cycle inversions, what causes them? So therefore, I stay away from calling cycle inversions took place, because for me, but that's my perspective, it's just a way to excuse for wrong analysis and just invert it, and then the opposite could be claimed. Therefore, TP, I mean, valid question, but I would not use the argumentation on inversions on deviating cycle observations. Yeah. Let's call it a session, right? So 45 minutes into it, I think everything is said around the current situation in Bitcoin. Please do your own due diligence and analysis. There are other ways to do this, but I hope to see you next week. Same place, same time. Keep an eye on the summertime changes, which took place in the US. We are a little bit late, but have a nice week. Stay safe. See you next week. Thank you.